Hello and welcome to this Forex Preview at XM.com. I'm Maria Pachordes, and joining me is lead investment analyst Rafi Boyadjian. We'll be discussing the upcoming Australian data, the federal election, and the outlook for the Aussie. So Rafi, the Reserve Bank of Australia, like most central banks, is grappling with high inflation. We just got the wage figures for the first quarter, and coming up on Thursday, we'll get the April jobs report. Is this data likely to impact the RBA's pace of rate hikes?
Well, indeed, Maria, I think there's a good chance that the RBA is paying close attention to what's happening in the labor market because it is tightening. And although we're not quite seeing any wage pressures building up just yet, as you mentioned, we had first quarter data out and it came in below expectations. So although that does suggest that the RBA has a little bit more time to it doesn't need to speed up rate hikes possibly. The overall labor market is looking pretty tight because the unemployment rate has fallen to 4%. It is expected to have dropped further in April to 3.9%. And employment is expected to have risen by a solid 30,000 in April. So all of that points to a very tight labor market indeed. And the RBA might, when it meets for its June meeting, they might decide to hike interest rates by larger than 25 basis points. Of course, we've got the minutes this week as well, which show that they were actually considering raising rates in May by 40 basis points. So strong data on Thursday could bolster those expectations that the RBA might move faster at its June meeting. And another positive factor there for the Australian economy is that China has started to relax its lockdown restrictions. China appears to be getting the latest COVID outbreak under control. So all of that bodes well for the Australian economy.
In addition to this data, investors have political risks on their radar, one of them being the upcoming federal election on Saturday. What are we expecting there, and what should traders look out for?
Well, the race has been tightening, in fact, between the opposition Labour Party and the ruling Liberal National Coalition. So Labour had managed to steadily increase their lead. Originally, the government did well at the start of the pandemic for their handling, but since 2021, they've been slipping behind the polls, and Labour gained lead, and they continue to widen it until around about February, March this year. But now the Liberal National Coalition has started to narrow the gap, so it's looking very tight race ahead of polling day on Saturday. Now, how would this impact the Australian dollar or local stock market? Because there's really a great deal of difference in terms of economic policies between the two. Now, the government of Scott Morrison is generally considered to be more business friendly. So possibly the Aussie might come under slight pressure if they lose the elections and Labour comes into power. On the other hand, the Labour Party have been less hostile towards China because Scott Morrison has had several confrontations with China, in fact, despite China being Australia's biggest market for exports. And China actually ended up placing a ban on certain Australian products because Scott Morrison was one of the leaders calling for an investigation into the origins of COVID-19. So under Labour, there will be less friction between Australia and China. So overall, you could say there isn't really much separating because no single party has really an edge in terms of business or economic policies over the other. So really the worst case outcome here, the thing that's likely to upset the Australian dollar more, is the possibility that because the race is tightening, we might end up with a hung parliament. So that could lead to the formation of a minority government, and that would possibly bring in a period of political instability. So that's probably the biggest concern for investors. But even then, I think overall, there isn't a huge risk from the elections as far as the markets are concerned.
Rafi, thanks so much. And thanks for joining us at XM.com.